Welcome to my corner of the internet. I'm the House Hacker, and today I want to talk to you about cryptocurrencies. Yesterday, I spoke to a friend about this topic, and after the conversation, I felt the need to go and look at YouTube and see what videos are out there. And maybe I could send something over that kind of captured the whole ideas that I thought that were important. What I ended up finding is that there were a lot of videos that seemed to focus on one thing and not really focus on other things that are relevant in this topic. So in this video, I kind of want to tackle it by addressing what I consider to be three sections that are really important to understand. First, I want to go over foundational information about cryptocurrency. This is basic information that before we can even begin talking about anything else, we need to understand it from at least surface level mechanics as well as, functionality. Then I want to talk about my opinion on using it as a currency, and then finally I want to talk about my opinion about investing in it. So let's dive right into this. After the crash of 2008, when distrust of financial institutions and banks was at an all-time high, Bitcoin emerged as this decentralized solution. Now, it's not clear that that was the motivation for the creation of Bitcoin, but it could really be inferred considering the timing and considering the way the technology was implemented. But how does a banking system or a money system work without a middleman? How does it become decentralized? Well, before we talk about it, we need to talk about the technology of blockchain. And so, to put things in a simple way, blockchain is simply blocks of information that contain a log of events that had occurred. And so this spins right off into the ledger. Now, I don't want to dive into every single cryptocurrency. I'm just going to talk about Bitcoin for the sake of this video, as that is the original cryptocurrency. So with the ledger, this is a tracker of every single transaction that's ever happened with Bitcoin ever. So if you have a Bitcoin transaction with your friend, well, it'll go into my ledger as well. And that way, if anyone's ledger deviates, then you know that there's a distrust and the system's built to not interact with individuals that have these deviations. So it prevents individuals from just fabricating their own Bitcoins. So in simple terms, every single person with a wallet has their own ledger. And that ledger is updated across the board for everybody. Whenever you open your wallet, it needs to pull in the updates, all the new transactions, and this can take time. And that's why there are different types of wallets. There are wallets that are stored totally on the cloud, wallets that are stored partially on the cloud, partially on your computer, and finally, the wallets stored on your computer. The wallets stored on your computer help you get a better understanding of what's actually happening, because on the cloud, in order to make it more convenient, you end up losing sight of what's actually happening. So Bitcoin wallets can be actually quite large because of the ledgers. And the way that you work around that is by getting the cloud wallet. That way, a centralized ledger is stored for that service. So whoever's providing you the cloud wallet will have their own ledger that'll update, and it'll support all of the wallets on their system, instead of you having to store it on your system. And it can get quite large. I'm gonna make sure, if it's not already on the screen, to post up an example of what the ledger looks like. And you can see that there's like all of these files. It's a lot of files. And those files just indicate every single transaction. Well, how does this happen without someone fabricating it? Well, you have what we call miners. These guys act as validators for the information, as well as they help package up those blocks and help transfer them. And for their effort, because it's not a charity, they are compensated. And that compensation exponentially reduces over time. So to just quickly kind of go over this section before we move on to the next one, just think of it like this. Everybody has a wallet, everybody has a ledger. The ledger has to update every single time you open up. It's based on validated information from the rest of the community. And no one can come in and put bad information because it will not jive with what everybody else has. And there's a couple different wallets. cloud wallets are convenient. Physical wallets or locally stored rather wallets are more secure, or they could be more secure, because they can be kept off of the internet and then brought back on whenever you need to use them. But they're a real nightmare to deal with because it's a lot of effort to deal with. And the wallets that have a little bit on the machine and a little bit on the local machine and a little bit on the cloud, those wallets, it kind of depends on how they manage them, but those are probably going to be a little bit more convenient, but a little bit less secure than an actual fully locally stored wallet. And it just depends on what you need. Now, let's talk about using cryptocurrency as a currency. What is a currency and how do we determine value? Well, currency is anything that we determine is going to be the holder of value, right? So instead of bartering, instead of me offering you, a chicken for an hour of your labor, or instead of, offering you 10 chickens in exchange for your cow, we have said that these objects, these pieces of paper that we have, are going to hold that value. And that value that we're all going to respect is universal, and we're going to then link that value in that piece of paper to everything else. So really, a currency is just whatever we say it is. Whatever we can all agree on to manage and hold our money, our wealth, rather, not money, but our wealth, so that we can trade with other individuals, that is the currency. And we determine value based off of supply and demand. So when it comes to cryptocurrency, it could in fact be a currency. It could be a functional currency. And the pro to it is that it's decentralized and there's lots of privacy with it. But there's some serious issues with making Bitcoin a currency. The first issue is it's extremely volatile. And maybe one day it'll be more stabilized. But right now, it's really challenging because it just doesn't make any sense to go around spending your Bitcoin. It makes a whole lot more sense to invest it right now than it does to use it as an actual currency. But the other issue, which I would say is even a bigger issue than volatility, is convenience. Now, I know that there's the crypto card that's out there, and there's a few other services that allow you to spend your Bitcoin, but there's one major issue with all of that. None of those services that allow you to use your Bitcoin as just everyday currency allow you to just walk into your local grocery store and just, buy your groceries with Bitcoin. It just doesn't exist like that. When I've done my Bitcoin transactions, my longest transaction took upwards of an hour. I mean, that is totally unacceptable. Versus, credit card, especially now with like the touchless pay. I mean, you're done in seconds. So Bitcoin needs to compete against services that are able to complete their financial transaction in seconds. And things like the crypto card don't quite meet the mark because it's not really a crypto card. I mean, you can back it, you can fill it with crypto, but it's not like you're going out and you're scanning your crypto card in Walmart and you're spending cryptocurrency. No, your cryptocurrency was converted into US dollars or whatever your local currency is, and now you're spending that currency. And so you're now having to play like these multiple steps to accomplish what you could have just more easily accomplished with less steps. There are benefits to using cryptocurrency as an actual currency, and maybe in the future it can be more viable as the technology improves, but I think right now it just doesn't make any sense as a currency. It's not there. So now let's move on to the third part of this topic, investing, and what I think about using cryptocurrency to invest. Well, I've invested 5% of my portfolio, my entire portfolio, in Bitcoin. Well, not Bitcoin, but cryptocurrency. A large part of it is Bitcoin, but my second largest holding is in Ethereum, and my third largest holding is in Litecoin, and finally my fourth largest is in Dogecoin. And Honestly, I barely have anything in Dogecoin. That just, it's crazy how much I made off of that, but I don't take that seriously. That being said, when you look at any of these things, when it comes to investing, new technologies have the most potential for growth, but they also have the greatest risk. So whenever you're investing in a new technology, you need to just accept that there is a possibility that you will lose everything. And don't go into it thinking that you want to time the market. It doesn't work. It's not going to work in your favor. Buy it, hold it, no matter what. I mean, right now, if my cryptocurrency portfolio dropped to half, just a huge crash comes, it drops to half, I won't sell. Let's say that it never recovers from that crash, and then 6 months later, it crashes even harder and it goes down to a fourth of my original holdings. I still will not sell. I plan to hold it, and I'm gonna sell when I retire. That's my game plan. And that's just how I approach these things. I mean, you can look at it from two perspectives. You can either approach investing like a lottery, and you may win, but most likely you won't. Or you just take the luck out of the equation. You're guaranteed to never win because you just don't play the game. But at the end of the day, what you do end up getting out of it is guaranteed. So instead of wasting your money on risks, take reduced risk by buying and holding and letting it grow. Another danger that you should watch out for when you're investing is there's a lot of these like alternative coins that you should really avoid. There's all kinds of, there's one called the scam coin that came out and people bought into that. Don't do that. Those individuals are trying to time the market. They're trying to game the system. You're going to lose. All right. The reality is you and I are neither one of us is smart enough to be gaming this system. The only people who can pull it off are individuals with insider knowledge who have access to information that neither of us have. You can't compete with those guys. They're going to be steps ahead of both of us because they have access to information that we don't. So what you do is you buy and you hold. You avoid these whimsical cryptocurrencies, and you just focus on stuff that's established, and then you allow those to grow. Ethereum's a big one. Litecoin's a big one. Dogecoin was not a really serious one, but it's becoming something, which is pretty shocking. I don't think it makes a whole lot of sense. I think that eventually it'll probably become nothing, but the fact that it's holding on the way that it is makes it worthwhile to buy and hold into. And Bitcoin is the original cryptocurrency. I mean, everything else is an alternative coin. So that's not going anywhere. Now, the way that I invest is I use two different services. And there's many different services you can use, more than just the two that I use, but I'm just going to talk about the two that I use because those are my preferred ones. I use a service called Webull, and I'm going to post my referral code down below if that's something you guys want to look into, because you can also trade stocks on Webull, and you get 2 free stocks with that referral code. With Webull, you can trade a handful of different cryptocurrencies. All the big ones are tradable on there, and there's a few moderate-sized ones. You can't really trade anything that's small on there. I also use Coinbase, and actually the majority of my crypto investing happens on Coinbase. Now, Coinbase is known for having higher fees than everybody else, but if you were to do direct deposit when you move money from your bank account to your Coinbase account so you can buy crypto, direct deposit will lower your trade rates substantially. I mean, it'll be very competitive with everybody else. But if you try and use a credit card, they're going to charge you like extremely high rates. So if you want to sign up for Coinbase, there's also a referral link in the description below for $10 if you sign up. Now, I actually like Coinbase better than the other services because it's more convenient to use them, and they have a much larger selection than other services. And the reason why Coinbase works so well is because it's actually a separate economy, cryptocurrency economy than the regular cryptocurrency economy, even though it follows very closely. And the reason why is because Coinbase has created its own little ecosystem where they've purchased a bunch of cryptocurrency, and whenever you conduct a trade on Coinbase, you're conducting that trade with another person on Coinbase. It's all conducted internally. So that way they can execute trades at a much faster, more aggressive rate than other services. Versus other services are open to the entire market. But I find that Coinbase is pretty convenient, and it's I've had much easier time using that. And if I did direct deposit, it cuts out a whole lot of the issues with the rates. So those are my thoughts on the investing. I think it's a good idea to invest, but again, do your own research, make your own decisions. I'm just trying to give you the input so that you can make the information so that you can make the best decision for yourself. So go ahead and comment below and let me know, do you have any money in crypto? Is that something that you've been on the fence about? Do you think it's worthwhile? I think it's worth a couple of percentages of your portfolio. And if you like this video, go ahead and hit the like button and subscribe and share the video. And hopefully we can help this channel grow. Let me know what you guys think, and thanks for watching. See you guys on the next one.